you saw in the middle of last week a real shakeout in some of the AI ecosystem. Software as a service took the major brunt of the selling. By the end of the week, you saw a massive short squeeze take place. Do you believe that the worst of the selling is behind us now?
We have certainly regarded this as an opportunity for investors to take exposure to a sector that commands generally a premium over the broader IT sector. I'm referring to software. There has been a lot of concerns that AI might be disrupting software companies, but we have held the view that actually it is empowering them. It is shortening the time for coding. It is enabling efficiencies of workflows. So for us, it's actually been an opportunity here to take exposure on a sector that gives also possibilities to invest more on the cloud infrastructure and also on some subsectors like cyber defense.
Yeah, I mean, last week there was also a lot of talk about this pullback incentivizing a rally elsewhere, i.e. that it would be an opportunity for us to see a more broadening of the rally that's taking place in U.S. stock markets. Do you subscribe to that view as well? And if so, which other parts of the economy do you want to have exposure to?
You know, certainly the tech sector continues to have strong earnings drivers, and we should not be looking away from that when opportunities such as those on software arise. But you're right to say that macro data have been actually better than expected altogether in 2025. We have upgraded our outlook for 2026 in terms of global growth, and that bodes well for a number of sectors as well, regions that benefit from better growth. Materials is one sector that we really like. We think that there is still a lot of upside. With your previous guest, you've also discussed about what commodities are doing. Metals are playing a very important role. So material sector, one that we like, and healthcare, I think, as well, for different reasons. Altogether, it does speak for a broadening of the earnings trend, positive earnings trend for more sectors.
Yeah. Well, let's talk more about the geographic divergence with earnings, because what you got is a pretty robust earnings season so far out of the U.S., but in Europe, it's a mixed bag. And one thing that caught my attention this morning, a Citi index showing that more analysts have downgraded rather than upgraded profit estimates since the end of 2025. How does that set the stage for the European equities outlook for this year?
I think European equities have, over the past 2 years, really depended on only a few sectors, financials being one very important one in Europe. So how the broader market in Europe develops over the next months very much has to do with how financials are doing, and also, of course, industrials for different reasons. So in Europe, I would expect a continued mixed bag. We have the region at neutral, but there have been some positive surprises in Asian regions. Japan, in particular, obviously standing out, and with the political clarity that we now have with regard to economic policy in Japan, I think a good omen for continued earnings trends going up.